My topic is adapting to an end-time scenario and how resource juniors can play a critical role. And right now, watching the whole sector, there are a half dozen structural reasons why the resource juniors are on a apparent trajectory to extinction as an ecosystem by the end of this decade. But I'm going to outline some stuff today, some really wild ideas about why they are actually the key to securing prosperity and security for the future. Now, there's two global trends that are driving us into the end times. One is climate change. The planet is warming. We see it every year. In fact, one of my companies in Arizona is still not drilling because it is still unsafe to drill. It is so hot in Arizona. This trend is only going to get worse. The energy transition goals are not going to be met. The other problem is geopolitical conflict between global East and West. The post-Cold War dream of globalization and China becoming just like the rest of us, it has fallen apart. We are now entering into a deglobalization process, and that also is going to require adaptation to new realities that I'm going to talk about today. With regard to the energy transition, it's an existential thing. If they can't keep it from increasing more than 1.5 degrees by 2040, 50, the planet will, the sea level will rise, the extreme weather will hit a lot of areas, and hot temperatures will change where agriculture is done. All of this will impact our infrastructure, cause it to fall apart more quickly, and it's also going to increase electricity demand. So whether you're pro-energy transition or not, the reality is we're going to need a lot more energy for air conditioning to keep us cool enough to survive. And you can look at the Middle East, Kuwait, places like that, where it is already a nightmare, constantly hot. Now, the reason I'm so pessimistic is that there are certain tipping points that we can hit over the next 10, 15 years, which can accelerate the global warming stuff way beyond our net zero emission goals. And that's the permafrost melting and releasing a much more potent greenhouse gas in the form of methane that's currently frozen. There's also ocean acidification. The oceans are the biggest carbon sink out there. All those clams absorbing the carbon dioxide, making clamshells, sinking to the bottom, and basically storing the CO2 back at the bottom of the sea. But when the ocean becomes too acidic, the ability to do this diminishes. And then there's, of course, the fact of polar ice cap melting, which that can hit a tipping point too, where it really starts to accelerate and sea levels start to rise in a very big way. So my view is, we need to start thinking about how to deal with life in 2040 and beyond. And frankly, that doesn't mean we need to give up all the clean energy goals that are part of, like, say, the IEA's vision of what needs to be done to try and do this, because the future is going to shift to electricity. And electric vehicles are the most obvious part of this transition, shift away from internal combustion engines. And that's been the big dream in the last few years. When Biden won the election in 2020, all of a sudden there was a big uplift in EV adoption. But that has stalled because the EVs are just not good enough for mass adoption. The Chinese EVs are because they're cheap. And China is now half of its car sales are EVs. China has embraced the EV sector in a big way. We are now in a lull where the Western car makers like Toyota are working on solid-state lithium-ion batteries, which they think they've figured out how to do it. Commercialization takes time. But by about 2028, that will be back on track, and we may have cars that cost the same as a Camry or Corolla that can drive 1,200 kilometers on a 10-minute charge. Now, when that becomes reality, then the whole thing takes off. And the paradox is we have a market that's ingrained to looking at what the metal price is now. And so lithium's in the doghouse. It's below $5 a pound lithium carbonate. Nothing really works. If you're going to have a EV replace ICE, you're not going to have the lithium available to do that. So there needs to be a change in thinking, longer-term thinking. What price do you need to deliver these materials that are required for these goals, like, for example, the lithium-ion battery-powered electric vehicle? Now, you might think that, okay, well, China at least, it's the biggest carbon dioxide emitter on the planet. It's at least embracing the EVs. But China's not doing that because it wants to meet the net zero emission goals. China is dealing with an extreme strategic vulnerability, and that is the fact it has negligible oil production. And to get oil to China to power its ICE fleet, well, if it gets into a conflict with the United States because it decides to annex Taiwan and basically take the chip factories offline, then they would, the United States could simply shut down all transport of oil to China. And how does China power its electric vehicles? Well, it's also poorly endowed with natural gas, and fracking for some reason doesn't work in China. So unlike the United States, where fracking for shale oil has made it the biggest producer of oil, but also a monster producer of natural gas, that can't happen in China. It relies on coal. Coal is what fires it. It's the worst carbon dioxide emitter from all the fossil fuels. And they're also the biggest developer of nuclear energy capacity, of which they also do not have much uranium, but lucky Kazakhstan, the world's biggest producer, is next to them and will supply them with everything that they eventually will need, which is why exploration for uranium deposits in the global West continues to be an important thing for juniors to do. There's a new kid on the block, in addition to like air conditioning demand going through the roof, future EV charging, electricity demand going through the roof, and it's the artificial intelligence dream. Now, right now, all the focus is on replacing the jobs of white-collar workers, and I'm not particularly thrilled about that. But part of the AI thing is the computational power that's now going into crunching material science and biotech possibilities. And so we're entering a period where there can be phenomenal breakthroughs in material science, energy efficiencies, and also in life-extending biotech innovations. And this is important because the boomers, 2040, if I live long enough, I might find out if any sacrifices to do the energy transition might work. I'll also find out if it didn't work. Probably I won't be around, and I am part of the me generation, so I don't really give a shit, and I'm not going to support these energy transition goals. But now I'm looking at, I could actually live that long and still have quality of life. Maybe I should rethink my opposition to this and not just adopt this end times mentality and sort of enjoy what's left of a livable planet. So anyways, the key thing is the energy demand increase. And the other week, I read something that China is now looking at fusion energy very seriously. In fact, it's turning it into its Manhattan Project. Now, fusion energy's been this dream for many, many decades, and it's always 20 years down the road. But there have been breakthroughs recently, such as at Livermore, which is not far from where I live, actually managing to gain energy from blasting some deuterium and tritium with lasers. Of course, the joke there was it took a lot of energy to prime the laser to give it that blast, so that isn't really a true breakthrough. But the work is going on, and with the AI computation going through the roof, and with quantum computing also on the horizon, enabling them to solve these information system calculations that they need for their magnetic bottles and all that to contain the whole fusion reaction. We're actually, I think, it's now realistic to dream that by 2040, commercialized fusion energy will be a reality. And the beauty of fusion energy is this would be like an oil-style revolution where suddenly you collapse the cost of energy 90%. And this is really important for the resource juniors. It's another idea, a paradigm shift that I thought about in the past couple of weeks. One of the problems with the resource juniors is they're supposed to deliver a discovery that's worth $500 billion plus. And they start with $5–10 million, and the odds of delivering something that gets bought out and built because it works at the metal prices we have are really, really lousy. So if you find something that's not quite there, boom, go to zero, and all the investors bail. And the market system, the financial establishment, they know that, and they prey on the juniors. They know that everything's biased to the downside. So the juniors have they're now in the 13th year of a sustained bear market with a few interruptions. But China's interest in fusion energy is because it understands these future energy needs, and it wants to be able to adapt to this. So they're working on this as their Manhattan Project, and this is not like whoever wins this race owns the world because they can destroy everybody else. No, this is because you achieve self-sufficiency, self-sustainability, because it also creates fresh water, which is another huge problem down the road. So I think we're going to hear a lot more about fusion energy, and this is important to the juniors. Now, Ross Beatty came up with the Lumina model, and sort of in the late 90s, he accumulated all these sort of worthless deposits, at 60, 80 cent copper. And eventually they got bought out for billions because when the China super cycle kicked in and expanded the global GDP about 5–10 times, it dragged the metal prices up. So all of a sudden, these deposits that had been found in the prior decades were dragged into the money by the higher real price. But going forward, we're all like waiting for the higher real price in copper and that, but it's not really happening. Now, there are reasons to believe that in the interim it will happen. But there's another way to look at this. Because of this geopolitical conflict that's happening, the idea of globalized trade where the best deposits flow their metals to anywhere in the world where somebody's willing to pay the price, that is falling apart. And so the juniors are going to become kind of almost like a reserve stockpiling strategy, which the Americans did during the Cold War in case there were supply disruptions as the Cold War turned hot. And the idea now is that it's similar to the royalty companies, but the royalty companies don't control the destiny of the deposit to which their royalty is attached. I think the financial establishment is going to create a new corporate entity. We call them deposit banks. They're going to be extremely well capitalized. They're going to be owned by all the pension plans as long-term entities. And their purpose is to buy out the middling results from the juniors who find deposits that don't make it with the grades that they have and the energy cost structure at the metal prices that we have. Now, we may get higher metal prices in the interim, which may justify, similar to what the super cycle caused. But what I'm predicting is that when energy fusion becomes reality, the metal prices can stay the same, but the cost collapses. So the deposits that have been found and inventoried inside these deposit banks, they end up being in the money in safe jurisdictions like Canada and the United States and can be developed. They've already delineated. They've got up to PEA, cost discovery, and flow sheet and all that figured out. And then they just sit there, literally mothballed. And the junior, of course, doesn't want to be a sleeper and sit around forever, do nothing. No, you start with $5–10 million valuation, and you raise money, you start delineating a discovery, you find out that it doesn't really work. Normally, you go back to zero. Now you might see a $50, $100 million buyout from one of these deposit banks. And then everybody gets, doesn't make a huge amount of money. It's not like a $500 million plus payout, but you get your money back and you start over and you repeat it. And this is the kind of paradigm shift in thinking about the role that resource juniors play that is really, really important, that needs to sink in there, because this idea of sniper kill shots delivering a world-class discovery, this is killing the junior sector. The permitting delays that are caused by the American NIMBY system and Canada's First Nation consultation system that's also killing the ability of juniors to raise money. And when there's really no exit except with a major discovery, the capital's not there. We've lost the audiences. This is why we're still stuck in the bear market while gold's at 2,600, making a record high. Now, the other problem is the geopolitical conflict. And basically, you've got the global West, which is still democracy, and now you've got global East, which is China, Russia, Iran, North Korea, places even like Saudi Arabia, which are basically dictatorships. And then there's the global South, which we sort of used to call emerging markets. And they're trying to sort of figure out where to go. And the conflict is heating up. The Russian invasion of Ukraine changed the world. China's forming an alliance with Russia to support this. This is now a major, major conflict with no resolution in sight. And this is, although deglobalization hasn't really happened, despite sanctions and all that, everything still moves around. When this starts getting hot, like say China annexing Taiwan, or let's say there's a Trump victory and he hands the keys of Ukraine to Russia, which then sets its sights on the rest of Europe, this conflict's just going to get worse and worse. Now, here's the problem that comes with this. I've circled in green all the global West countries, and in purple the global East countries. The global West countries in the top 20 GDP companies are 52% of GDP, 104 trillion for this year. The global East ones are only about 20%, and the few global South that are in there are only 9%. Now, here is the graphic that everybody should memorize, incorporate, and fully understand. The blue is that percent of each metal's global supply delivered by global West countries. The red is the global East countries, and the green is the global South countries. Now, clearly, the economies that control over 50% of GDP supply, in most cases, only 10 to 20% of the raw materials that feed GDP. And if global South ends up joining the global East, and China's in a much better position to butter the bread of global South countries than global West countries, then you can assume that everything that isn't blue is going to be red and not available to the global West economies in a deglobalized economy. And here's the joke. I mean, in 2022, the metal produced and calculated at the average price was 1.3% of GDP. Now, the fossil fuels are a much bigger percent of GDP, about 8%. But the ones in blue that I've circled are ones that China has already put export controls on. And of course, these are deliberate measures taken. But if the conflict gets hot and trade's no longer happening, metals that China and Russia dominate in are not going to be available. So we have the biggest economy in the global West collectively, and yet we're going to lose this kingdom because we don't have the physical sword to defend it. And this is an example. Aclara is here, the Carina project. It's very interesting. The rock value is only about $45 a ton right now. But back in 2009 to 11, when China did a trial run of shutting down supply of a critical metal that they control, look what happened. It was the rock value of what Aclara has at Carina in Brazil was $400. It's right now about $45. So these, when I say like the future is collapsing cost structure, the interim is the risk of soaring metal prices because the metals from now these hostile regions are no longer available. And I look for companies like Aclara, which are developing this. The stock is cheap because really it's not in the super money. But if you have this sort of thing starting to happen again, it's how quickly can you develop it. And it is kind of an example of this deposit bank concept that I'm thinking about, is that we shouldn't be focused on finding a winner that works at the metal prices that we have. I mean, Patriot Battery delivered a PEA for its Corvette project, which it has now named to some unpronounceable thing that sounds like Jackie Chew something or other. That thing, the price they use to make it work is twice the current spot price. So it's actually worthless. But and the stock's, of course, gone down. But if the market starts thinking strategically of what's needed by 2030 in terms of lithium supply, you just keep putting money into it now because it's big, it's rich, it's in the upper tier of deposits. And in the case of this is this ionic clay class of deposit. You don't have to crack hard rock minerals. It's already been cracked by Mother Nature. You simply need to strip out the rare earths. So here's about 9 metals in which China dominates. Now, I would really just want you to focus on the big black China spot. That means like they got 70% or more of supply. The ones with the X's are where they've already introduced export controls. If things get hot overnight, these all become problematic metals. And of course, the ones that got everybody excited about was antimony, which is part of like military gear and fire retardants and so on. Oops. The other thing is, this is a more broader-based collection of the more prominent base metals, and I've circled those metals, where China is not an overwhelming producer. And this is also why China is now interested in fusion energy, because China thinks long-term, not like just the next election cycle. So they're thinking, we're pretty poor on copper, and copper's going to be part of this enormous amount of more electricity that we're going to need. So if they're the leader in molybdenum supply, and molybdenum are part of porphyry systems with sort of copper halos that aren't very high grade. But if suddenly they have energy cost at 10% of what it used to be, they can become domestically self-sufficient in these metals that are there in their country. And this is the whole concept I have with the resource juniors is find coherent, large systems, figure out what they are. They can be underground in America and Canada. If it's underground mine, it won't create the big open pit eyesore, but 0.3% copper isn't good enough. But if you have a collapsing energy price, then all of a sudden these underground resources can be mined. China is thinking long-term. That's why they're going to put a lot of money into the fusion energy project. So this graphic I've been showing for the past decade and a half, it basically shows how China is becoming a greater share of the economy. Right now, China has finally kind of hit the wall and has its own problems, and it's unclear if this convergence will happen. But the problem is if we have this geopolitical disruption and trade slows down and raw materials slow down, all projections about GDP go down the toilet. So we're entering into an unknown territory, and Russia taking over Ukraine and then setting its sights on Estonia and so on, and annexing Taiwan and basically expanding its footprint in its South China Sea backyard. These are all potential tipping points that change the way everything is thought about. So gold, the gold big mystery, 2,605 on Friday. And the juniors have barely budged. The majors are up maybe 40 to 60%. The intermediates are 50 to 120%. From the lows in mid-February, gold's up about 25, 30%. Where's the leverage? And gold's an uncharted territory compared to 850 here, and even here in 2011. But it isn't. I take the above-ground gold stock and divide its value in a year at the average gold price by the GDP, global GDP. And back in 1980, when it hit 850, that was an extremely stressful period. Gold was, 24% of the GDP? And then we had this long period where the United States won the Cold War, and we had globalization and peace. The bottom there was right here. And where it is now, of course, the global economy's grown, we're still only 16%. So we're nowhere near the stress. And people talk about inflation. Well, inflation has subdued again. But we're facing a changing world situation. The global West and global East will carve up the world. There's not going to be globalized trade. It's unpredictable what's going to happen. The US dollar is not going to remain the world currency to settle transactions. And so gold is actually serving as a bridge. It's being bought to bridge with something that's like a super tanker that's going to crash, and there's nothing you can do to change its course. And here's another graphic I've used in the past. So I've taken those extremes of 25% and 3% of GDP and simply extrapolated that as to what it would be. It's not unreasonable to see gold soar to $4,000 in real prices without fiat currency debasement or the collapsing US dollar. And this isn't really what my peers on that talk about. It's usually the same old story about America spending too much money on poor people and blah, 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 and that's going to sink the nation. No, it's about the fact that America is diminishing on the global scale. And here's gold in perspective, why this doesn't really move the needle. In real terms, it's only up 68%. And that's after 30 years of harvesting all the low-hanging fruit that became available at $400 in 1980. Now the fruit is much higher hanging. We need a higher real price to really move the needle in terms of putting deposits into the money, because all the good stuff has been found and developed since then. So one of the big issues that I've had, for most of my life is this political spectrum from left to right. Where are you on the ideological spectrum? Are you balanced right in the middle there, slightly left of center, slightly right of center? And I realized this is a completely different model. You need to take that linear spectrum and bend it into a horseshoe so that on this side, you basically have people who have absolute truths that they just invent. And on this side, you have them absolute truths that are grounded in some metaphysical assumptions or whatever. None of them are verifiable or anything. This is the world of science, pragmatism, knowing that you're never going to be perfectly right, that there's always going to be trade-offs. That's why you negotiate. That's what a democracy is. And down here is where you have know-it-alls with their autocracies, theocracies, and all that going on. And the global south is straddling this right now. The global east is already way down here. And the question is, will the global south sink down in here, stranding the global west? And so how you think about things is really important, especially when you consider that the Republican Party right now, with its MAGA vision, is talking about sinking into the bottom part of the belief horseshoe and becoming just like Russia, China, these other nations, Iran, theocracy, forcing beliefs down people's throat, and basically causing the breakup of America, because California, a country with more people than Canada, a bigger GDP than Canada, is not going to stand by and let some Alabama hee-haw jam his beliefs down the throats of the Californians. So this is a clear and present danger coming up as to what the outcome of this election is, and that we're entering a very uncertain period, because if America becomes MAGA and stands alone, then the problems that I outlined become this. And this is America's share of raw material supply, and this is China's and Russia. And if America stands alone and nobody is its friend, where is it going to get this stuff from? Well, it's going to have to go for it domestically. So even in this horror show that might unfold, there's going to be resource juniors. They are going to be the ones that are going to have to find the raw materials that are no longer available due to the self-inflicted isolation of the United States and its withdrawal from the global West. And just to wrap up here, this chart shows money raised by resource juniors on the TSX Venture. It's pitiful. It's nothing compared to before. In inflation-adjusted terms, we are in a super funding bear market. And here's how much money is left in the system. $3.8 billion in the companies that have positive working capital, a couple billion in the negative owed by the other companies. And here's a distribution. About only 455 companies have more than $500,000, and even $500,000 isn't enough to get anything done. This system is starved. We're like on the edge of an extinction cliff, but we're also on the edge of a potential revival where all of a sudden resource juniors are seen as critical to securing democracy and prosperity for the global West, even as the rest of the world goes into the garbage can. And you can't see it very well here, but again, traded value, it's been pitiful for the last 2 years. But in this chart, Friday, something special happened. The traded value of TSX Venture resource listings went way up to $80 million or something like that. It usually bumbles between 20 and 40 million. We may be finally at an inflection point, so cross my fingers, and thank you for coming out today. And follow me on X so that you can see when I do my free Kaiser Watch episodes, where I get into a lot more detail about all the things that ail the sector and what can help it. Thank you.